Hey traders, it's Christopher Mullen from thetechnicaltraders.com. Want to run through the charts real quick with the Dow, the transports, the SP 500 or the NASDAQ, and a couple other sectors like the tech, the healthcare, and financials. And look at the difference between the the dogs of the market and the leading sectors. Now, here's the Dow. The Dow is underperforming quite a bit. We're nowhere near this kind of area here where the market had a little bit of a hiccup. We're definitely underperforming, and that's because the Dow, it's got a lot of transports in there, transportation, industrial. Of course, all those things came to a grinding halt. So it's at a very limited bounce. And if you take a look at the transportation index, the IYT, of course, it is nowhere near these highs, not even close to here. It's very minimal, this bounce, and it looks really weak still. Now, if we were to move over to where the money's been flowing, take a look over at, if we go to the NASDAQ here, NASDAQ's tech heavy. It's broken above this consolidation here. It's working its way up to these highs, and of course, a handful of the big tech companies really drive the entire market. So we're seeing the NASDAQ really perform exceptionally well. Now, the other areas, take a look over at the healthcare. Healthcare, obviously the virus health related, so it makes sense that healthcare's had, it actually rallied the quickest, and it's already been consolidating for almost a month here already at this point. So it was the quickest to get up here. It's holding its ground. It does have a nice bull flag in terms of price action. You look at this rally up. It's been consolidating. It is into this major resistance area, this kind of topping phase here. So it may end up stalling out and rolling over, or it might continue to extend. Now, if the overall stock market does roll over, we're going to see these get sucked down with it. Pretty much think of the stock market as the tide. When the tide's going down, pretty much all boats, which is each sector, goes down with it. Now, so the healthcare has been doing really well. Now, if we take a look over at the financials, and this is a real financial kind of crisis that's happening, financials are performing just as bad as the transports, down at the bottom, really just forming a big bear flag. And you could argue it is starting to break down. If we were to just draw a line across the bottoms here, across here, you could argue it is starting to break down. And if you could argue there's a shoulder, a head, a shoulder, a neckline. You could argue that this is a bear flag. Everyone sees and draws charts in a different way. We've got to move down here. We've got a little bit of a bear flag. It's holding at the 5-day and the 20-day. Potentially, it's got a downward move down to around here. And if it picks up speed, I mean, we're going back down to the double dip and potentially much lower. So that's kind of what's going on with the charts. The Dow, the financials, the transports, all performing really poorly, while the healthcare and tech are at the opposite end of the spectrum, trading up near the highs. So it's important to know where you want to be. If the market does start to roll over, take a look at the weekly chart of financials, XLF. Let's go way back in time to the last financial crisis. And let's go back even further. If we take a look at this price action, let's just draw a box on the chart right across here. If we were to just draw a level across here, this is the market. It has broken down below the significant pivot low, so major damage has been done. It's now making lower lows. Over here, it was a bit different time, but overall, you could argue this was a major significant support level, although these ones here were critical. This was the start of the bear market. Once we broke this low here on this move down, that was the real start of the full bear market. But this consolidation right here happened to be more or less the market just ripped through there, but we're back into this kind of territory where we've broken down. It's now bounced back up. I think it's something very similar to this where it's broken down, it's bounced back up. Here's the breakdown and the bounce up. And overall, this could be the halfway mark for financials. We've got this first move down. We could have the second move moving much lower. And if we were to just draw on this chart, the daily chart gives us actually a good view of this. Let's just draw a Fibonacci extension. We go from these highs down to this low and then up to these highs. And of course, we can zoom way out on the chart and get a feel for where those targets are. Let's go way back here. Here are those downside targets for the financial sector. This is kind of the worst performing sector. We've got to move down to this area and then potentially all the way down to the $10 level on the XLF that the financials completely get crippled. And of course, that brings us down to a major support zone. This is a major pivot area on the chart. Just look at this zone here. It was a support, it was a resistance, it was resistance. It acted here. We had a lot of consolidation, congestion through there, so there's going to be lots of volume. And that's where the next kind of potential bottom is for the financial sector. If all starts to break loose, it doesn't mean it's going to go down that quickly. But just remember, most bear markets will give up 7 to 10 years of gains in only 8 to 12 months. So, we've got this massive move higher. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9 or so years, and really half of it was given back in 1 month. And yeah, who knows how long this could take. This could drag out and drift lower. We could go into a panic washout again. This could be gone in another month. Who knows? This market moves so fast. There's no liquidity. When people start selling, there's no one out there wanting to buy, and that's why we have this massive drop in price. But keep in mind, we could wipe out 10 years more or less of gains in another month, and that will be substantial for those who haven't moved to cash, who don't know how to profit from a falling market. And you got to be really aware of these. To me, some of the best opportunities are to play these underperforming, because if they can't rally in a stock market that's rallying substantially, when the market starts to roll over, these are going to fall the most. You want the worst of the worst, and they're just going to collapse much faster than a tech company. Tech is going to find lots of support. Bargain hunters will be out there trying to buy up as the big brand tech names start to fall. But these underperforming companies having financial issues, I mean, there is no supply or buyers out there. So when it starts to fall, there's going to be even fewer, and you get a bigger waterfall type sell-off. So anyways, thought you'd like to see the leading sectors, the lagging sectors, and where you may want to focus on the financials, maybe transportations, if we get another coronavirus flare-up and we start to see this sector start to break down. Thanks for watching the video. If you like what you saw and heard, give us a thumbs up down below and subscribe. Take care. Bye-bye.